Hello everyone, this is your host Vaibhav. In today's session of Daily Stock, we are going to look at the quarterly earnings and its prospects for the ongoing quarter, the third quarter, along with its share price trajectory. So, we are going to consider the fundamental and the technical aspects of the Goldman Sachs, its earnings, its share price, and what we can do to take advantage of the prevailing situation, prevailing scenario. If we analyze the current scenario of the Goldman Sachs, we will get a good idea of how the things are shaping up and what we can do to get to ride this ongoing wave where we have seen the bearish momentum prevail in the share price of the Goldman Sachs, and the Goldman Sachs share price has continued to spiral downward for last couple of weeks, and on the fundamental side, we have seen its earnings, its profit reach 3-year lows. But I think, given the company's optimism regarding the earnings for the third quarter of this year, we don't need to be overly bearish, and if we figure out some support levels, we can even expect a turnaround of sort in these Goldman Sachs shares. Now, let us look at the quarterly earnings first. This is the earnings report for the second quarter of 2023. The Goldman Sachs earnings came in last month, 19th of July, where it declared the EPS of US dollar 3.08 and the dividend at US dollar 2.75 per common share. And if we look at the statement of its chairman and CEO, he sounds positive on the coming quarters, even though he has also acknowledged some weakness and the initiatives the bank is taking to get through these slowdown in the revenues and eventually start making more money, start generating growth, because in the second quarter of 2023 the revenues are lower sequentially as well as annually. Now let's look at the financial summary. The net revenues for the second quarter 23 stood at US dollar 10.9 billion, which are lower compared to the first quarter earnings of more than $11 billion, and the second quarter of 2022 had brought in the revenues of more than US dollar 12 billion. So on both this count, these revenues are lower. We will also go into the details of why the Goldman Sachs earnings are lower. Of course, one of the reason is cyclical. This quarter tends to be weaker comparatively, so that is also a reason, but there are other factors at play as well. The company has provided both quarterly as well as half and yearly revenues. These are the highlights. If we look at the segment wise performance, the global banking and market segment has generated revenues of $7.19 billion, along with the asset and wealth management contributing just little more than $3 billion. Asset under management have increased by $42 billion, with these total now standing at a record of US dollar 2.71 trillion. The platform solution have also generated returns of US dollar 659 million, and this is one segment where there has been robust growth, but it is happening on a lower base. So overall, the revenues are still lower. The board of directors have also approved the quarterly dividend with 10% increase beginning the third quarter of 23rd. These are the net revenues. Then this is the breakup of revenues under these head global banking and markets with various subsets bringing in this much amount of money. Asset and wealth management, even if we look at the loss in equity investment, the management and other fees have performed quite well, and as a result of that, the revenues are holding around this price area. This total stands above $3 billion. Platform solutions, as I said, this is remarkably higher. Company has also provided for these losses at US dollar 615 million, operating expenses, provision for taxes. Now we will not really go into these all the expenses. We will look at the highlights of the company's earnings and what the company is expecting for the third quarter. These are the segment-wise revenues, and let us look at the broader picture. Now we are not going to go into the all smaller fine prints. This is the consolidated statement of income, and here we get to compare the company's this quarter, that is second quarter ended June 30th, 2023 performance with the first quarter, and the first quarter of 2023 and the second quarter of 2022. Here, these are the revenues with investment banking contributing substantially along with these other heads bringing in money, but overall the net revenues are significantly lower with this decline being observed annually as well as sequentially. So this, no, I think I needed to increase the thickness and go for a brighter shade. Alright. Oh no. So these are the net revenues for this quarter. And then if we look at the operating expenses have gone up for the company, and that is why we are looking at this squeeze in the profit margin of the company, and the earnings are damn too lower. If you look closely, in the first quarter, the company's earnings were upward of $3 billion, and in the second quarter of 2022, the earnings were in the vicinity of $3 billion. But now here we have these net earnings standing at just little above $1 billion. So that's too much of an decline, and that is happening because company has provided it has made some provisions, one-off provisions, and that has been a drag on the company's net revenues. But the company is indeed expecting the turnaround, and we are likely to see much better figures for the third quarter of 2022. Now let us look at the highlights of the company's earnings. There are some positive highlights as well, where the Goldman Sachs has been able to hold on to its position of being the number one choice in the merger and acquisition space, equity and equity related offerings, strong equities performance, including record financing net revenues, and asset under management have also now reached a record of US dollar 2.71 trillion, with these record management and other fees bringing in US dollar 2.35 billion. These are the financial results which we have already seen. Now, if you want to go into the details, it is better for us to keep looking for opportunities to go short. So, if you are a trader quite confident about the current trajectory with this ongoing bearishness, so the immediate outlook, the short term to medium term outlook remains bearish, but we can't really say the same thing about the longer term trajectory because, as I said, we do watch out for. And if we see the day charting, but I think there is some problem. Okay, all right, we got it. And as I said, the immediate swing low of around 300 is going to be an important marker with the possibility of Goldman Sachs continuing to move downward at least till that level, and maybe it can even dip slightly below that. So that possibility is there. And in these kind of circumstances, with lower revenues and charting also seemingly on the bearish side with this formation of lower highs and lower lows, we can expect the continuation of this bearish trajectory and expect the Goldman Sachs share price to dip below this immediate swing low. And after that, whenever and on whatever levels the Goldman Sachs consolidates, those will be the level of keen interest to us. And if not total turnaround, at least we can expect that it can bounce sort of retracement from those low levels. So till that happens for at least next couple of weeks, the outlook remains bearish, and maybe by the end of next month, if we get some stabilization, and as we will be approaching close to the earnings date of the third quarter, we can then start scoring for the opportunities to buy the stock. Till then, it is keeping that in mind. The short term to medium term outlook remains bearish, while the larger term, longer term outlook is flat. There is not much possibility of reversal from the longer term, but even it is not too bearish from the longer term. So we will have to take a cautious approach on that count. So that's all from my side for today's session. If you have any query or any idea to share, do write to me in the feedback and I'll be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous time ahead. See you next time around. Till then.